Hey y'all, welcome back. I'm Sherrika the Realtor, and I'm still here with Jenay, the lender from Summit Funding. And again, we're going through some more questions that you may have. But if we miss something, just leave it in the comments and we'll get back with you. So down payment assistance, does that change your interest rate?
Yes, it does. So I always say nothing's free. There's always a cost for everything, right? So there's different assistance amounts that you can get depending on what makes the most sense. So just kind of rule of thumb, if we had a $200,000 loan, you could get a 3% grant, which would be $6,000. You could get a 4% grant, which would be $8,000, or a 5% grant, which would be $10,000. This is money that would go towards your total cash to close. So it would help lower the amount of money that you need. The more assistance that you receive under these down payment assistance programs, the higher those interest rates are going to be. So this is where we would strategically look at how much money do you have, where is your budget, and what makes the most sense. If we don't need the full $10,000, then let's go with the lower one that's going to get you a lower interest rate and help stay within budget on your monthly payment.
Okay, that makes sense. What are the lender fees I have to pay at closing?
So lender fees are pretty comparable really with whatever lender you use. And I don't know I guess the question would be are you asking specifically for just lender or total all fees?
Both.
Okay. Okay, so because that's a kind of opening question. So lenders, let's say Summit Funding, right? So Summit Funding, we basically have $8.99 for our processing fee and $5.99 for our admin fee, and that's all the actual lender costs are that we charge, okay? But that's not your cash to close. That's not your total cost. Right. So when you ask for lender fees, a lot of times people blanket this and bucket everything that we're estimating in lender fees, but we don't control 95% of these fees, right? So this is your title company, this is your surveyor, this is your appraiser, this is the attorneys that are drawing the docs, the tax certificates, flood certificates, right? These are all things that are third-party costs. We as a lender have to estimate, and this is our realistic number, what we think our best number is as we're preparing you for an estimated amount that you need for closing, when we really don't know exactly what these are. So this is why it's key to have a lender that's not going to undercut this. So it looks really good up front on day one, and then you turn around and you get to closing and you're sitting there signing the papers and you're like, I didn't know I needed an extra $1,500 or $2,000. Sometimes I'm like, if it looks too good to be true, it probably is too good to be true.
Okay. So with that being said, you already have, why do you need so much of my information? Like, I showed you how much money I have in the bank. I told you that, and my credit score is good. Why do you need to get all of my business like that?
So it is not us. It's not me, right? If it was up to me, I wouldn't ask for anything and we would just roll with it, and I'd give you your money and write you the check for $400,000 and we would walk away because it would make our life a whole lot easier too. But I always say I don't make the rules. I have to follow the rules. So what happens is we have to provide all this, we have to collect all this information. And the reason why is a little bit of, hey, if you said you made a certain amount, we've got to know where your money's coming from. But we're following your Fannie Mae, Freddie Mac, or your Ginnie Mae rules and regulations. And so after closing, what a consumer part doesn't see is that all of that information that we collected, we are actually packaging that up and we're sending it off because we've got to get our insurance. And so this is what protects us as a lender against default. So Sherrika, you buy a house, we've packaged this loan up and we get our insurance from FHA. FHA says, yes, you met all the rules and the guidelines, and we underwrote and we closed that loan specific to how they told us to. They insure us. So because they now insured our loan with you, if you were to go into default and foreclosure, then we are protected some as far as a lender against that risk. So if we were to lose a ton of money, FHA is going to step in and help us solidify and close the gap on the amount of money that we would lose. So as lenders, we need that insurance to stay in business.
Right. Okay. So since the banks won't let me make as much money as far as earning interest, I have some money at home, and then I have some in stocks.
Okay.
Can I use that?
So not at home. So all of the money that you use to purchase a house has to be sourced. And unfortunately, we can't source the money underneath the mattress. Even though I've had a client that sent me a picture of the money sitting at their house. They're like, I have it. And I'm like, I know you have it. I can't use it because I got to get it into a bank, but I can't just have a large deposit, just money thrown in there. So these FHA, Fannie, Freddie, they say we have to source where that money came from. So if it can't be sourced, we can't use it. Now you can get gifts. We can do stocks. Stocks can be documented. We have statements, we have documentation that we can show where you sold stocks in order to purchase. Those are things that you can use. But you can't just say, I'm going to throw $5,000 in the bank and us not ask questions where it came from.
Okay, but you can get money from
Stocks.
No, gift money.
Yes, absolutely.
Parents, grandparents, cousins, aunts, anybody?
Family members. So mom, dad, brother, sister, aunt, uncle. Okay. And so it's, not limited to just mom or dad or something like that. So now the big thing is that depending on which type of loan program we're doing, there's a couple of ways. I always tell everybody if they are getting a gift, just make sure that whoever that gift donor is willing to provide us some documentation on their bank account that shows that, and we don't care what they've got going on in their bank account. We just want to know that they had the money in there and that the money was transferred to our borrower that's on our loan and it came from an acceptable source.
So if they're being gifted the money, whoever the gifter is needs to show proof from their bank account where their money has came from.
Yes, there's a couple of ways sometimes around that, but yes, that's a good way to put it.
Okay. So I'm having my credit worked on, and I had some things disputed, a few things disputed.
Oh, yes.
Will that affect me?
Yeah, it could. Okay. So FHA is one of those that has a very specific guideline on disputed accounts. So what they came in and said that they kind of caught up with what was going on. You had credit companies that would go in and they would dispute all of these credits on the credit report. And then actually it kind of looks like it was never there with the credit bureaus, because the credit bureaus at that point don't really know what to do with it. They're like, hey, they're disputing it. Is it right or wrong? Well, then it would temporarily move a borrower's credit scores up. So FHA got wind of it, found out what was going on, and people were just disputing their derogatory accounts and said, okay, if you are in a dispute and that dispute is over $1,000 of cumulative balances, so you could have one for $300, another one for $500, and another one for $500. You have 3 accounts that cumulative balance is over $1,000. You have to go in and you resolve those disputes now with the creditor and the credit bureau. So with FHA specifically, they say, yes, you have to have it resolved. Otherwise, it can't stay outstanding. So one of the negatives with credit repair is that particular, or that you did it maybe 3 or 4 years ago, and then you kind of stopped with the plan, you stopped, working with the creditor or with the credit repair company, and the dispute stays on there for years because you never did anything with it. So now we got to go back in and get it taken off.
Wow, okay. Okay, that's good. So, because I thought during that time period, if they have like a certain amount of days to get back with you, and then either it's resolved or if it's confirmed, then
technically, yes,
it should be done.
That is correct, but it's not always that way. Yeah. Most of the time, it doesn't happen.
And we had one like that.
Yeah, so it happens a lot.
Okay. Which bureau do you use to check my FICO score?
All three major credit bureaus: Equifax, Experian, and TransUnion. Okay. So we drop the high score, drop the low score, and we take the mid score for qualifying. Are you going to ask me a question about credit? I got something I want to say.
Well, say it.
Okay, awesome. Okay, good. So one of the biggest questions I get is around credit scores and that credit bureaus. So we have clients call us all the time, and credit monitoring services are excellent. Credit Karma, you could go to, credit card may have a way to show what your credit score is. And then what happens is we come in and we pull credit, and our score shows very differently than what maybe the consumer site sees, because the consumer sites use different credit algorithms to generate what they think the score is with the credit bureaus. They're not getting that information directly from the credit bureaus. Well, the credit bureaus will say, hey, your score can go up to 850, with us directly with the credit bureaus. Well, then you're going onto a consumer site, maybe like Credit Karma, where they're going to a 950 maximum credit score. Well, obviously, if you can generate to a 950 score, you could see that credit score being higher with Credit Karma on the consumer site than when it comes in and it's with us. So one of the biggest things is that I pull it and then it's different. And it's not to be alarmed by that, because your credit monitoring services, I want everybody to have a credit monitoring service. You need to know what's being reported on my credit report, what's happening with it. If it's going up with the credit monitoring service, your credit score, you know it's going to go up with the bureaus. If it goes down, then we know something is derogatory has hit it and we need to look at it. So it's a great monitoring tool, but don't use it specifically for credit scores.
Right. Okay, that's good. Bankruptcy. If I file for bankruptcy, can I still qualify for a loan?
You can, but not right away. So bankruptcy, typically you want to wait 2 years after you filed bankruptcy. And that's going to be your government type loan. So I would say normally you're just going to have a little bit of waiting time period.
It doesn't matter. It's like, is it only 2 chapters?
Chapter 7 and Chapter 13. Okay. So basically, one allows you to pay back. So if I owed $50,000, I could make payments over the next 5 years to pay that $50,000 back. Mm-hmm. That one will allow you for 1 year in repayment with good payment histories, but you have to have the okay from the bankruptcy judge in order to enter into a new debt with the mortgage. I can tell you this is a very difficult process. They have a very short time period that they allow you to do it. And I can tell you, I'm pretty sure nobody that has ever been able to do it because of the time constraints that they put on you, that you have to find a house, and then if they even let you do it. So at that point, you go to the other one that just says, the other bankruptcy that says, hey, I owe $50,000, I'm not paying it back. I just want it to wipe away. I don't want to worry about it again. 2 years, once you've had 2 years from the discharge date, then you're eligible to buy at that point.
Good. So basically don't apply until that 2 year mark?
Yeah, don't apply until the 2 year mark. And I always say if you know you want to buy a house and maybe you're a year and a half from your discharge date, mm-hmm. and you just want us to pull credit, kind of get an idea where you stand, make sure cash, credit, income, those 3 things are okay. I would say it's never too early to at least let us take a look at it. Make sure you're on the right path, because, hey, if we got 6 months to do something that we might need to work on, then at that point we can work on it. And you got time before your actual 2 years is there.
So it goes back to my other video that you should talk to a lender at least 6 months. I say about 6 months before you actually want to move. So then bankruptcy, but on the IRS, can you still purchase if you owe the IRS?
So if you owe the IRS and you are on a payment plan, then you can purchase a house because you've got a repayment plan with them. We just count it into your debt to income ratio. As long as you qualify with the payment, you're totally fine. If you are not, and if you have a federal tax lien and you are not on any type of repayment plan, then no, you cannot buy. You've got to pay it off in full.
Okay. So I had this one worded differently, but since I'm getting there, I don't want to say it. Somebody is married, but the client won't sign the divorce papers. Can she still buy?
No. Well, no.
Not without him.
Yeah, so Texas is a community property state. So in the state of Texas, community property state, as long as you are married, there's no separation clause in the state of Texas. So you're either married or you're divorced. Mm-hmm. So if you are wanting to buy a house and you're still legally married, know that your husband, separated husband, whoever it is going to have to sign the deed of trust and have to sign some documents at closing. We may even have to pull their credit depending on what type of loan that they're doing. And if you're selling, the same thing goes in. You've got to, because if they're on deed, they're of any kind, they're going to have to sign.
Okay. How long does the approval process take?
Like just to actually get approved. I mean, you could call us today. We could have you approved in the same day. I always like to say though, it's the pre-approval versus the pre-qualification. It kind of goes back to that, right? How thorough are we being? Are we doing our due diligence, getting all of the proper documentation, making sure that there's no red flags, or there's going to be anything that would be an issue as you get out there, start searching for your house. So it could take a few hours to get us all the paperwork that we need. But once we actually have all the paperwork, we can pre-approve you in about 30, 45 minutes.
Once they found a house, gone on the contract, how long till closing?
On average, 30 days. So 30 days or less, that gives us time typically to do all the verifications that we need to do.
And that is when they'll need their money. So even if they don't have the money for the closing, the day they qualify for the loan, they have till closing to get the note?
No, not all the way to closing. So we've got to verify that money in the account before we can get a final loan approval. So if they go under contract today and they need $15,000 total to be able to purchase this house, they don't need the $15,000 that day they sign the contract. They're going to need some money, earnest money. They're going to need to pay for an appraisal up front. There's going to be a few upfront costs that they're going to have immediately to secure the property. And then we could go through maybe even a couple weeks, but we cannot get underwriting to approve that loan until we verify that all of the money is sitting in their bank account. So they can't just walk into closing and say, hey, Jenay, here's my $15,000.
Right.
Because we are going to have to say, you know what, we really need that about 10 days before closing so we have enough time to wrap it up.
That's good. Okay, that is all we have for the approval process. If you are a homeowner and you're thinking about selling and possibly buying or refinancing, tune in to part 2. And if we missed anything, make sure you leave your comments below. And remember, don't let fear stop you from growing. If it costs you your peace, it costs too much, because we buy properties and not problems.